Yes guys, so welcome back to my channel, and I am back again with another strategy video. Again, many people come on YouTube, they understand the knowledge, they know the basics, but they don't know how to put it into a profitable strategy. So what I'm going to be doing here on my YouTube channel, I'm going to be giving out as many sort of profitable strategies that there are out there. Again, when it comes to it, definitely do take the knowledge, do test it, back test it, put it into the charts as well, and then obviously you can go live with it. But when it comes to all of this, I would say that you do need some at least basic understanding of market structure and a few other components. By the way, I do have a completely free course, 7 modules down below, so you can access that free of charge. Honestly, people charge like $500 for the type of content I put into there. It's a whole 7 days, whole 7 modules, you'll get access to it for free. So yeah, just sign up to that below. And also when it comes to this strategy, this whole 5-minute market structure shift strategy, the PDF guide, I'm going to be leaving it down below as well, so any one of you can access it and obviously use it to advantage. Now, we'll get straight into it. So there's a few steps that we are going to be using for this every single time. Now, in general, market structure is going to be very important. Understanding liquidity as well. Timing will also be important. So I guess these 3 things are the core sort of concepts of this. We do have, so this is obviously on the 5-minute time frame, and it is applied pretty much during London session every single time. I do have other strategies that are on the high time frame. You know, I release one which is like a 4-hour swing strategy if you want to look at that on YouTube somewhere. But yeah, with this one, generally what we will need, first of all, is step number 1, marking out Asia range using the Nikko 948 indicator. Now, when it comes to this, I will just show you over here. Bringing it up, pretty much the input, so Asian range Nikko 948. In terms of the input, I would put 1900 to 0000. That's good. That's basically going to translate to midnight in the UK, all the way up to 5 a.m. in the UK as well. So that's the Asia range that we pretty much go off usually. When it comes to the up, obviously you can see the edits I've made to the colors and stuff if you want to use that. But yeah, just as simple as that, and that pretty much will plot out the Asian range every single morning. Now, in terms of the second step, we are going to be looking for a liquidity sweep of a high or a low. It could be within the range or it could be the whole range. What I mean by this is you will get 2 types of things. So say, for example, you have Asia range that does something like this. I'll try my best to... Okay, so let's just say that is your Asia range. Push this down just a bit further. Okay, let's just say, for example, that is your Asia range. You can also have a different type of Asia range, which will have something like this. So let's say something like that. So in general, your Asia range box is going to look something like this right here, right? So you've got 2 main types, as we've just described. Now, when it comes to this, you're going to have 2 types of liquidations that could potentially happen, or 2 liquidity sweeps that could happen. Type number 1. Type 1 will be the whole range sweep. And let me just get this in bigger writing as well. Let's put it bold and 28. So we've got type 1, which is the whole range sweep. Then also we have got type 2, which is going to be the internal range sweep. Internal range sweep. Now, what I mean by this is this over here. So when it comes to the sweeps, obviously there are a few variations of it, right? When it comes to the first one, the whole range sweep, is going to be very, very simple. Price will, during London session, let's say it does that, it continues up to the top or the bottom or whatever, and then it reverses. So this area right here that it sweeps, as you can see, that is when price will react to it, take that liquidity and flip to the other side completely. Now, there's another type as well, which is something like this. So say, for example, price is kind of pushing down, and then eventually it has an internal range sweep and it continues downwards. As you can see over here, for example, there is resting liquidity above this secondary high. Generally, what I would say is the most effective is going to be this one right here. Again, we do have examples of the internal range sweep. I have got 3 examples of trades that I am going to go through, and obviously you can use it to your advantage. But these are the 2 main types of sweeps that we are mainly going to be using. Now, this is the first part of the whole strategy. You're going to be looking for that sweep. The second part is going to be the market structure shift. Some people will refer to this as a break of structure. Some people refer to this as a change of character. In my opinion, it really doesn't matter. Every different educator or every single person who, talks about it just has a different way of talking about it, in a way, a different term. But at the end of the day, it's the same stuff. So when someone comes up with a new term, don't get bothered by it, because they're not recreating anything new. If anything, I think a lot of concepts that people use have just been recreated from what previous educators have had. A lot of people talk about order blocks. That comes from supply and demand. It's just a different name for it, but we just stick by it. Anyways, enough waffle about that. Number 3, we're looking for a market structure shift. So in this example, as you can see, we've very clearly got one over here. Mainly what we're looking for is going to be a market structure shift below the range. That is the best type of market structure shift. Another type will obviously be one where, for example, price can push downwards, and then it obviously, let's just say it takes some secondary type of structure. Could be something like this. Where as we get through some examples, we're going to see what it looks like. Generally, that's going to be number 3. So once you get that, your market structure shift is going to be pointed out over here. Then as soon as we get that market structure shift to the downside, or whichever side it's moving towards, we would then make sure a new high or low has been formed. So in a way, once we have this market structure shift, we don't want it to be giving us a lot of wicks around here and just kind of like chilling around this point over here and keeps on staying around there, right? We basically want it to create a low, push up, and then that's when we identify, okay, we've now had the liquidation at the top, market structure shift to the downside, a new low has been created. This is where we can move on to the next step. And the next one is going to be setting a fib tool at 61.8%. This one is very, very simple. All you're going to have to do, go to your fib retracement tool, put it out, and I've got it saved. So my settings, for example, we've got the 0, we've got the 0.62, and then we've got the 1. Again, you can use my colors if you wish. Generally up to you. It doesn't really matter. Because I've got a blue color scheme, I usually just go for the red, so it's a bit different. So what we will do is we will mark out the high and the low, and then simply put that 62%. And generally, this is a rule that we're going to use, and there's a few variations of this as well. You could just enter from the 61.8% retracement, or for example, you could get to the point where you see a fair value gap or you see an order block that looks really nice, and you simply just refine it to that. So again, it just depends on how risky you want to be. Again, the stop loss is going to be quite consistent. It's simply just going to be at the high or the low, depending on which side of the market you are on. And then simply the take profit, or at least take profit 1, is going to be at the end of the range. So in terms of the variations that I talked about, this is something that I do want to point out as well. So let's just get a few more diagrams going on. So as I said, we've got Asia range happening over here. There we go. Asia range is complete. Then we get the liquidation at the top, market structure shift to the bottom. Then type 1 of the variation is going to be the 62% fib retracement. And all we will do is simply just enter something like this. You see? Or the next opportunity is we do, let's just copy and paste it all over. So if we copy that over there, again, when it comes to our liquidation at the top, we're just going to use the same example over here. You would mark out your 62%. So generally, you want to look for a point of interest around this kind of area. You don't want it any less than here. Here is a no-go zone. Here is definitely an area that you want to stick to. So anywhere here, you do not want to stick to. Anywhere there, you do. So let's just say, for example, there's an order block over here, and then you have an imbalance or a fair value gap just below. All we will do, we just mark it out, for example, just over there. So let's just say, for example, you had something there. All you would do, you'd mark it out there. If you really wanted to play it very risky, you could put your stop loss just there, make it extra tight. But generally, because you are going to be quite consistent with the strategy over and over again, all you're going to want to do is something like this, and you'd simply just leave it down below. Now, again, when it comes to these types of strategies, guys, these are as mechanical as I can make it for you. And this is one thing that has genuinely changed trading for a lot of my traders, not only for me, but for a lot of my traders as well. that have joined the community and everything. When it comes to a mechanical strategy, you need a few things. You need, first of all, set entry models that you can actually stick to. When we stick to them, we also have something called the golden confirmation. So in general, what I would look for is something like this. I have an entry type 1, entry type 2, and type 3. If it links to the golden confirmation and everything is in line, that's when I would enter the trade. And with that, I'm able to achieve consistently 1 to 3s to 1 to 6s. And again, all of this has been proved live as well. Every single entry I send out live to my premium group. But if you are interested in learning this, this is my elite strategy that I have been sort of teaching for, I would say 6-7 months now. And it's come to the point where over 2,000 elite traders, hundreds of traders that I can't even name how many there are. I just know there's so many because they keep on coming in. Student profits, again, such consistency. And that's the main thing. You do not want to have a strategy that gives you confusion. You want it to be as mechanical as possible. Hence why I've done this. And in terms of pricing as well, I've tried to make it as accessible to as many people as possible. Genuinely, for $49.99, not many people are going to get anything like this from any other course provider, from any other educator. Again, I have eliminated the idea of courses. I've given out everything for free, a whole 7 modules. So even, let's just say, for example, you knew the knowledge, it comes to the point where, you know, you want to put it into a strategy and something that actually works. So again, guys, from $200 gone down to $49.99, and you get all of this, including the Elite Strategy Bootcamp that I do hold with all the members as well. And of course, when it comes to my live entries, exclusively these members would be able to access them if they upgrade to the premium. But yeah, if you do want to learn the strategy step by step, here it is. Anyways, let's get back into everything. So we've come up to the point now where we've identified we've got type 1, a whole range sweep, type 2, an internal range sweep, then also the different variations of what you can actually use. So let's just call this type 1 entry, and we're going to call this the 61.8% fib. Let's make this bold as well. What was it? 24 and bold. Okay, cool. So that's going to be type 1. Type 2 is going to be quite similar as we've talked about, but type 2 entry model. We have fair value gap / order block around 61.8% fib. So this one, like I've said, it's essential to also keep the Fibonacci just to understand in and around where we can look, but our point of interest is going to be defined by something specific. Now, we've talked about the different types. We've talked about the types of entries as well. How about take profits? Now, with take profits, it's going to be as simple as this. Take profit 1 is always going to be at the low of the Asia range, or not the Asia range, but at the low of the range from the market structure shift, or at the high if we are moving to the upside. Type number 2 is going to be variable. So this is obviously optional to all of you. If, for example, you wanted to extend it even further, let's just say, for example, we had from the previous day, we had some equal lows right there. We understand that equal lows can be targeted very, very easily, right? So at that point, that's when we can expect, okay, this can be extended further down. So our take profit 1 would be over here, and our take profit 2 would be over here as well. In terms of our risk management, again, I've taken a few notes and just talked about it all. Again, guys, if you do want this whole PDF guide, I've given it out for completely free down below, and you'll have access to it. So we've talked about entries, take profit, now about risk management. Because of the amount or because of the volume of trades that you are going to be taking with this strategy, because it does come up quite often. And again, if you are monitoring a few pairs, you will see a few opportunities. 0.5% to 1% risk per trade. With that, always remember to set your initial take profit at the end of the range, as we've talked about. Stick to only 3 pairs consistently. So for me personally, and this is in my elite strategy, and I've made this very, very clear. As you go through, for example, you can clearly see Euro JPY is one of them that I extend to sometimes. Euro USD, Euro GBP, GBP USD. These are the main ones, especially EU and GU. Euro GBP is also one of them that I do like. You know, at times, for example, there are, you know, variations where I go into other pairs when they do look really nice. But yeah, very, very simple with all of this. Stick to 3 pairs, I would say. My recommendations are obviously these 3. And then the final rule, this is very, very important for your risk management plan. Please, please, please stick to 2 losing trades a day and you're out of the markets. The reason I say that is because if you are a novice and you are getting into trading and you see this video, you might get really amped up. You're very excited to do it because it looks very good with all the evidence that I'm going to show you with the 3 sort of entries. As you can see, when we get into some of the examples, you're gonna be able to see. When you get into it, you could be faked out on either side of the market. This is why I say you need to have a very good understanding on, for example, where can price potentially move towards. So take profits is very important. A great understanding of liquidity points and a very good understanding of market structure. I talk about all of this in my free course. So again, it's something that you can access very, very easily. You know, you don't have to spend so much time searching around and everything. You've got everything there. And so just a quick little side note for those of you that really want to take their trading to the next level. The one thing I always recommend to my students is backtesting and journaling. And the one place I personally use for all of this is Trader Edge. So this software gives you all the access to every single backtesting feature that you need, a whole strategy tester to allow you to put it into different libraries, a calendar, which I believe is actually one of the most essential tools to accurately track your trades and see your progress over time, and one of my personal favorites, the forward testing feature, which allows you to project how a certain strategy will do over time. So if you want to get started with this, click the link in the description to access one of the most trusted backtesting softwares there is available. So I think that makes it very, very clear in terms of the concept of the strategy. It works very, very well. It's something that I used for a while, to be honest, before I constructed my elite strategy. Now, of course, you know, I have my own strategy that I've developed with all the concepts that I used to use, but now it's a lot more concise. But anyways, getting into some examples. As you can see, we start on the 5-minute time frame. Remember, this is always going to be on the 5-minute time frame. As you can see over here, price has been moving towards the upside. Asia range has occurred. We've got this range over here. Now, in this example, we're talking about type 1 in terms of our entries, or in terms of our Asia range sort of liquidations. We have the one where it doesn't take just the internal range, but it takes external range. So that's the main type. Over here, as you can see, price has literally just liquidated the top. Nice little sweep there above. Had a market structure shift to the downside. And as you can see, as soon as that has happened and price has started to move upwards, at this point, I can tell that, okay, now we are clearly going to be, you know, setting our Fibonacci retracement. So very, very simply, just mark it all out. 62% fib, and as you can see, it marks out with this kind of point over here. Now, I wanted to show this example because this is one where once you see this, I believe that most people with experience and with testing this would actually take this approach. Now, generally, if the 62% fib lines up with a nice order block or a nice fair value gap, then you enter it and you have no discussion about it. But let's just say, for example, we have the 62% fib retracement, but just above it, we have a fair value gap or an order block that looks very, very nice. I would generally aim to enter at that point. However, let's just say you entered at 62. You obviously would have taken some partials over here at 1.6 risk to reward. Again, if you did take the fair value gap, it would look something like this. Some people take it a bit riskier, where they take the 50% of the fair value gap. So something like that. Again, I wouldn't go down all the way down to that kind of area, just because you have a chance of missing the trade at least. So for maybe 0.5 risk to reward, for me, it's not worth missing, you know? But yeah, as price does this, as you can see, the high has then been swept in this internal high, went into the fair value gap and then just pushed downwards. Again, even if, for example, we had it at the lower one, a nice little risk to reward. As we move downwards, this is where I talk about the variations on the take profit. So number 2, take profit at any variable point in market structure. Now with this, when I am looking at it, where would I be interested? So for me personally, in my head, and this is the way I always break it down to my students, look at the market and always prepare yourself for where it can potentially reverse. This is a very simple concept that I think a lot of people need to understand. When you look at the market in general, and this is one piece of advice I always stick to, look at where it can potentially stop and react from. So where can price react from? There's 2 types of areas in the markets, and I've talked about this in another video, but I'll make it clear again. You've got 2 main areas. You've got imbalances, and you have, let's just call it slow price action. POIs. Now, imbalances is where price obviously moves very, very quickly. It moves like that. Slow price action is where obviously you get more of this, right? Now, at these areas or at these supply and demand zones, that's where we can expect price to slow down. So I would mark up, as you can see over here. I would mark up, let me just change the color. I would mark up this area first, and then I would mark up this demand zone down here. Potentially, yes, we have some liquidity at the bottom, so that could be an area that we aim for. But my take profits would look something like this at this demand zone over here. So 2.37 risk to reward. Let me just quickly mark that down. As you can see over there. Then moving this even further down as well, we also have another 3.58. So let's just call it 3.6 risk to reward. And that is as simple as that. And I would genuinely be content at that point. In terms of timing, it's getting to New York session, so you could hold. But once this consolidation came in, I definitely would have just taken profit. So it's as simple as that, really. There's nothing more complicated to this. I would say once you actually get started with the strategy and you implement it and everything, you're going to see quite a lot of success with it. Again, just constantly testing it. Looking back at back tests, one pair is, I would say, not enough for this. I would say maybe 2-3 pairs that you can keep your eye on. Make them slightly different. So let's just say, for example, you've got EU, GU, and AUD USD, for example. Again, for me personally, my elite strategy, I basically just stick to the main 3 pairs, EG, EU, and GU. That's mainly what I stick to. But yeah, with this strategy, you can kind of see, you can easily aim for something like this, where it's 1 to 3, 1 to 2, 1 to 1.6. Obviously, initially, that's always what you're going to get as a standard. But yeah, it's a very consistent strategy, I would say. Obviously, you have to look for the market in a way where, say, for example, here we haven't seen any liquidity sweep here, but we have seen it from the bottom. So can we potentially enter at this point? Well, yes. Say, for example, over here, price is pushed upwards. We've had a market structure shift just above here. So again, it's not a complete one above there. So again, this would not have been one of the most optimal setups. And as you can see, price sort of pushed up for a bit, but then it returned backwards. You're going to be looking for setups mainly like this. Now, just zooming out, I had a few other examples that I wanted to go through. So these two over here. This one is going to be to that internal range liquidity that we talked about. So when we're talking about internal range, we've got this one over here. We have this one over here as well. And as you can see, what price has actually done, it's swept that liquidity. As you can see, so as it's pushed downwards, it swept the liquidity and had a little push to the downside. The market structure shift was at this point over here. Again, when it comes to the market structure shift, it doesn't have to be on the main range. It can just be on the internal range. Again, this will benefit you when it comes to risk to reward because, again, look at this. Price has swept the internal liquidity. As price has pushed downwards, it's broken past this low over here. Had this market structure shift over here. So let's quickly mark that out. Internal range liquidity. Then here we do have a sweep, liquidity sweep. And then at this point we do have return to 61.8%. Very, very simple. And then this point would be take profit 1. Now let's just consider where can we potentially take more profits. I'm just going to reduce the sizes of all of these. And I think a lot of these case studies would benefit you. I hope up until now, this is all making sense. So when it comes to taking this even further, let's just quickly change this. Final one. And let's quickly look at our take profit. So with this one, I'm going to be honest, just based on the way it's reacted from this demand zone, I would have been quite content in taking a lot of partials from this point over here. Again, the first take profit would have been, it actually would have been at the take profit 1, market structure shift, and then take profit 2. I would have been very, very content with something down here. So this trade would have yielded you a very nice 1 to 3 risk to reward. Again, if you did hold it, I would not have felt as confident to hold it because genuinely, look, price is reacting very well here. Nice little order flow. The only place that I would have been targeting would be there. So let's just say, for example, you did continue it further. That could have been your final take profit. So a little 1 to 7 risk to reward. I say little, but at that point, you're not full margin, right? You're most likely, you've taken some of the trade off. You've most likely taken, let's say, 60 to 70% of the trade already. So there's not much left at that point. You're going to be making another, 30% on, what's the difference here? 1 to 3 risk to reward. So you'll be getting another 1R just from here to here, basically. But again, money's money in a way. Now, I hope that one makes sense. I'm going to be sending out these as case studies as well. And it should make sense quite easily. The third and final case study that we're looking at over here. So case study number 3. Very, very similar to the first one. As you can see, we've got a sweep of the high. So we have this liquidity sweep, which is step number 2. So let's quickly annotate that. So we've got that liquidity sweep over there. Then the next point, we have our market structure shift over here. And then finally, or I say finally, we next put our range. So we put the 61.8%. Again, when it comes to this, you could put it from the peak. So it could be over there. But I would say if it goes past here, it's definitely going to take that stop loss anyway. So really and truly, that should be your max stop loss in a way. So you just put it there, line it up. And as you can see, is price looking good there? Is there any order block, fair value gap? There's nothing there. It's simply just the 61.8%. So this is why I talk about the 2 variations of entries. Keep your mind open to using both the fib retracement, but also some of the specific point of interests. Then where would our take profit 1 be? Very, very easily. 1.6 risk to reward over here. That happens every single time. And then where would I take it next? In this example, I would say it's a bit risky, to be honest. But I think this kind of area, because that demand zone has been reacting very nicely. As you can see, pushing up. Order flow is very nice. Boom, like this. So I don't really expect it to push further down. I'll take most of my profits by this point. So that's 1 to 3 risk to reward. And then if price continued further, I'd look for something like here. So let me just mark out this supply zone. So that would have been take profit 2. And then let's just say, for example, over here, the next demand zone over there as well. So I hope a lot of what I'm saying is starting to make sense now. Remember, the main thing over here is keep consistent with everything, right? My take profit 2 would have been hit very nicely over there, and take profit 1 would have been just over here. So hope that's all making sense. Again, like I've said, guys, this 5-minute market structure shift strategy, it really does work. This was something that I was getting into pretty much before I was making my elite strategy. Obviously, with my elite strategy, I've basically taken concepts from what I used to use, all the strategies and everything, and improve my win rate to as high as possible. And now, obviously, I'm able to achieve, these kind of returns daily. And, again, I say daily, for example, I'm always looking at the market. I have 2 sessions in the day. I have 2 hours in the morning, 8 o'clock to 10 o'clock, and I have 2 hours from 1 o'clock to 3 o'clock UK time as well. So these are the main 2 sessions I'm aiming for in London and in New York. If I could get an entry, perfect. If not, then no rush, because I know that I'm usually going to get, let's just say, between 3 to 4 entries a week. And for me, that's good enough. That could be on a good week, for example, 1 to 10 risk to reward. I'm not looking for them crazy risk to reward trades where people are aiming for 1 to 50s and all these crazy numbers. I mean, I've personally never seen a trader like that be consistent. The only consistency I've seen is from these types of trades, something that you can look at every single day, something that's mechanical. And again, this strategy is as mechanical as you can get. So guys, I hope you enjoyed this video. Please share it and everything. And I look forward to see you in the next ones.